All right, welcome back to the final round here on Yahoo Finance. Miles Other with you on this Thursday afternoon. Let's take a quick check at the market. We are moving lower, kind of holding near session lows, I should say, right now. The Dow, the S&P both off about 1.5%. The NASDAQ is down more like 2.5%. All right, let's turn our attention now to the venture world, and we'll combat, I guess, some myths that we have about founder startups. I think the Zuckerberg boyhood myth, probably a negative one for everybody trying to start their own business. We're joined now for more on this by Ethan Mollick. He's the author of the new book, The Unicorn's Shadow, Combating the Dangerous Myths That Hold Back Startups, Founders, and Investors. And so, Ethan, let's start, I guess, with that conception that I think I have, because like everybody else, I saw the movie and I'm like, oh, well, kids, that's the startup world. But your work actually reveals that, venture, kind of founders are not all kids wearing flip-flops right out of Stanford.
Yeah, actually, that's not, the flip-flop wearing Stanford kids get a lot of the startup money, but they're not actually the most successful. So it turns out the average age for a founder in the United States is 42. The average age for a founder getting VC is 42. And the average age for someone launching a hypergrowth company that is between the top 0.1% of all employment growth, 45 to 59. So a lot of that conception is wrong. A lot of our view of what a founder looks like is sort of rooted in myth and movies rather than in reality.
And I guess in thinking about embarking on this project, were you trying to maybe like debunk your own, preconceived notions, or how did the genesis of this come about? Because I just think these findings would be surprising, even to folks who are in the venture space and paying attention to these sorts of things.
Yeah, so I'm a professor at Wharton at the Business School of the University of Pennsylvania, also an ex-entrepreneur myself, MBA, did the whole real world stuff before becoming an academic. And what's frustrating to me is that a lot of people go on the wisdom and sort of gut feel of what to do as an entrepreneur. But the truth is we actually have really good data, especially over the last 5 or 10 years. There's been a revolution in academic study of entrepreneurship. And most of that revolution isn't heard by founders. So I tried to write a short book that summarized 150 or so papers, including some of my own research, on what we know about what makes entrepreneurs successful.
Ethan, Dan Roberts here. Thanks for joining us. Especially given the subtitle of your book, The Dangerous Myths That There Are About Founders, while we have you, I'd be really curious to get your take on the sort of troubling trend that has emerged now between the tech press and startup founders. And that has really gone into overdrive in the last year. I mean, talk about dangerous myths. There are more and more stories about founders who either are to blame for a toxic culture or to blame for problems at the company. And then increasingly, they lash out by blaming the tech press and saying that the media is seeking out those stories and making them, reporting them in misleading ways. I'm just curious, where you think blame lies in all of this, and whether that toxic relationship now so often between the tech press and the companies that the tech press are covering can improve.
Yeah, I mean, the issue often is that entrepreneurs are lionized, and sometimes for very good reason. Almost all job growth in the US comes from new startups. It's a risky business. People are putting themselves on the line. On the other hand, we actually know that toxicity among cultures, early days of startups, spreads throughout the culture in the long term and creates long-term negative effects. And we know that things like misogyny and other factors that are real in startups actually hold back women founders. Women make up 38% of business owners in the US, but they only make up somewhere between 4 and 8% of VC-funded founders. So there are a lot of things that have to be examined and opened up, and I don't think it necessarily is toxic to pay attention to these things.
Yeah, Ethan, I'm happy that you commented that on the gender specific question there, because I was curious just about female versus male. But then going off of that, you note here in your book, just talk about personality and how personality plays into this role of being a successful entrepreneur. It's not necessarily what we would think of. So I'm just curious just about what the personality traits are for the most successful entrepreneurs out there.
Okay, so that's another giant myth. So it turns out there are personality traits that predict you becoming an entrepreneur. The biggest one, by the way, overconfidence. So overconfident people more likely to start rock bands, to try and be in Hollywood, go into hip hop and also become entrepreneurs. That doesn't predict success. So there's no single personality trait that strongly predicts entrepreneurial success. A little bit of conscientiousness, a little bit of liking to be in control, but nothing is so large that there's a particular entrepreneurial type that you should be funding over other people. And that's another myth that we see very often.
And then Ethan, just thinking about the VC space more broadly, you mentioned job creation, and I think where it fits right now in the pop business culture, if that's a thing that exists out there. With the pandemic, and I think this kind of hard look we're all taking at everything around us, do you think that the VC world and just the world of startups and entrepreneurship, is that going to take a different track kind of on the other side of this? How do you see this hiccup impacting a space that it really had everything break its way for the last couple decades?
Well, I mean, as much as it's broken its way, right, we go back to the Stanford grad and flip-flops that gets most of the VC money. That's actually true, right? The average distance between a VC and a company to invest in is 80 miles. 40% of VC investment is within 2 miles of the VC's headquarters. So one of the things that could be positive out of this is actually breaking some of the geographic boundaries. Talent is evenly distributed, opportunity is not, right? So if venture capital is able to, through these kind of Zoom calls like we're doing now, or Google meetings or whatever, hang out and connect with people all over the world, then there's a chance for more talent and more growth. So maybe this breaks down some of those bottlenecks that makes a lot of the funding stories of the last couple of years feel very samey, and we start to focus on other issues and real concerns. So I'm very hopeful that the future might look more equitable and more innovative than it did even before this breakdown.
And then just finally, before we let you go, you are a professor, and I'm sure that what your students are interested in is shifting over time, and the students, the number of students that are signing up for classes maybe has increased, decreased, I don't know. But when you think about what the young folks that you're in contact with, what areas they're excited about, what they're focused on, where do you see that energy going right now, and how has that changed just in the last couple of years?
So it's been really interesting. I've taught this for a while, and the shift, before this, Wharton was somewhat famous for these direct-to-consumer startups. So whether you think about Warby Parker or Jet.com or all of these other things started by Wharton people and alumni, there was lots of direct-to-consumer Harrys. And I think what I've seen happen just in the last couple of months since COVID is a real refocusing on fundamentals. So how do we replace what's being burned down in the economy, direct retail, things like that, some of these opportunities that didn't exist before, and a lot more focus on social good. How do we rebuild this stuff in a way that makes the world a better place? So I'm really excited about entrepreneurship for the future here. I think that there's real opportunities, but I think it's going to require a level of ambition and support from everyone, from the venture capitalists to the government, to recover from where we are right now.
All right, the book is The Unicorn's Shadow: Combating the Dangerous Myths That Hold Back Startups, Founders, and Investors. Ethan Mollick, thank you so much for joining the program. Talk soon.
Thanks for having me.